Good evening. The closing bell has rung in New York, and silver has settled at $86.50. With the Chicago Mercantile Exchange now closed for the weekend, electronic trading systems have paused, and Western price discovery has come to a temporary halt. As hedge fund managers and institutional traders step away from their desks following Friday's session, attention is turning to developments unfolding beyond financial markets. The article describes a rapidly evolving geopolitical backdrop coinciding with the market close. It reports that 4 United States soldiers have been killed. It states that Israel is expanding ground operations into southern Lebanon. It further notes that Iran has deployed naval mines across critical shipping lanes in the Persian Gulf. In addition, Russia has publicly announced intelligence and tactical support for Iranian retaliation operations. These events, according to the report, are occurring while major Western exchanges remain closed for the weekend. The article emphasizes the timing of market closure in relation to geopolitical developments, highlighting what it characterizes as weekend risk. With U.S. futures markets, the London Bullion Market Association, and other Western trading venues offline, the quoted silver price remains fixed at $86.50 despite ongoing international events. The report argues that any significant developments during this period would not be reflected in Western pricing mechanisms until markets reopen. The article then details the mechanics of what it describes as a weekend gap in the silver market and explains why such events can present heightened exposure for institutional traders holding short futures positions. During a normal trading week, price adjustments occur in real time. If unexpected developments arise midweek, the silver price typically moves incrementally. Traders can monitor fluctuations, adjust hedge positions, reduce exposure, or close contracts during active market hours. Liquidity is available, and stop-loss orders can execute as prices move through predetermined levels. However, once markets close on Friday at 4:15 p.m. Eastern Time, COMEX trading halts. The London Bullion Market Association ceases activity, and Western electronic futures platforms go offline. For approximately 63 hours, there is no official Western price discovery. The quoted price remains frozen at $86.50 regardless of geopolitical developments. According to the article, while formal trading pauses, global events continue. It describes safe haven demand building in physical markets, increased inquiries to vaults in financial centers such as Zurich, and buying interest developing in Asian hubs including Singapore and Hong Kong. This accumulation of demand is not reflected in Western futures pricing while exchanges are closed. When Asian electronic markets reopen on Sunday night U.S. time, including the Shanghai Futures Exchange, price discovery resumes. The article explains that instead of gradual movement, the reopening can result in a single upward gap if accumulated demand is repriced immediately. In that scenario, stop-loss orders placed at intermediate price levels may not execute if the market opens above them. Institutional traders with short positions could then face margin calls if prices open significantly higher than Friday's close. The report outlines why it considers the current geopolitical environment especially significant. It references the deaths of 4 United States soldiers and notes that American military casualties can carry legal and political implications under the War Powers Resolution, including the possibility of congressional authorization debates within a defined time frame. It also highlights Israel's expansion of ground operations into southern Lebanon and Iran's deployment of naval mines in the Strait of Hormuz, a maritime corridor through which approximately 17 million barrels of oil move each day. In addition, Russia has publicly announced intelligence sharing and tactical support for Iranian retaliation operations, broadening the scope of the situation. Beyond military developments, the article turns to structural conditions in the silver futures market. It states that total open interest in COMEX silver futures stands at approximately 150,000 contracts, with each contract representing 5,000 ounces. That equates to 750 million ounces of paper exposure. At the same time, registered physical inventory at COMEX vaults is cited at 28 million ounces, reflecting a ratio of roughly 27 paper claims for every 1 physical ounce available for delivery. Under typical market conditions, only a small percentage of contracts proceed to physical delivery, with most positions rolled forward or settled in cash. However, the article asserts that current global dynamics differ from standard environments. It references increased demand for physical metal, sovereign buying interest in Eastern markets, and limited mint supply capacity. In this context, it suggests that a significant increase in delivery requests could place strain on existing inventory levels. The report also discusses the repurchase agreement, or repo, market. It explains that major U.S. banks regularly roll over short-term funding obligations each Friday by pledging U.S. Treasury securities as collateral in exchange for overnight liquidity. The article states that in the event of major geopolitical escalation, Treasury bond prices could decline if yields rise. reducing collateral value and potentially increasing funding stress within the banking system. In closing, the article brings together the geopolitical developments and financial market structure described throughout the report. It reiterates that Western silver markets closed at $86.50, while international events continued during the weekend trading pause. The first major exchange to resume activity will be in Asia, specifically the Shanghai Gold Exchange and the Shanghai Futures Exchange, which begin trading Sunday night U.S. time. According to the article, price adjustments reflecting weekend developments would first appear in those markets before reaching New York when trading resumes Monday morning. It concludes by contrasting the temporary closure of paper markets with the uninterrupted nature of physical silver ownership. While electronic exchanges pause, global geopolitical developments continue. As Asian trading platforms prepare to reopen, market participants will be watching closely to see how accumulated weekend events are reflected in silver pricing when price discovery resumes.